To China's political season now, where finance and the economy topped the discussions Saturday at the ongoing 2 sessions at the Great Hall of the People. China's finance sector is committed to supporting the country's growth and stabilizing the stock markets. That's according to regulators in a series of heavyweight new conferences. They covered a number of topics on monetary policy and market regulation. CCTV's Ming Tian was there.
Chinese finance regulators have a busy Saturday, explaining their policy stance to the public since the early morning. The central bank officials said they would keep the monetary policy prudent, but lean to easing when necessary.
The official statement from the State Council document emphasized flexibility and appropriateness, and also said during a presser in Shanghai that the prudent monetary policy has an easing bias. This fits the actual situation since the second half of 2015 till now.
The governor also said the bank would not promote China's exports by depreciating the currency. They say despite the headwinds, the country's share in global export market rose last year, and Chinese products are still relatively competitive. Deputy Governor Yi Gang said the drop in the country's foreign reserves is because more foreign currency is in the public's hands now.
Most of the outflow is purchased by enterprises, banks, and citizens through the market. Taking last year as an example, the dollar deposits held by enterprises and citizens inside the country was up tens of billions of dollars. What else is worth mentioning is that our financial organizations increased their US dollar holdings to cope with uncertainty.
Later in the day, the country's state-owned enterprise regulator also gave out the prescription of reform, destocking unnecessary production in coal, steel, and promoting more promising sectors in aerospace, nuclear, high-speed rails, and so on. We just heard from the central bank and the state-owned enterprise watchdog on how their policy can support the country's growth, and we're very soon expecting other comments on the country's regulators in insurance, securities, and banking.
First, we have to upgrade the banking industry's service quality and efficiency while serving the real economy. For example, improving the difficult financial situation for small and micro businesses, boosting financial innovation, which supports the development of real economy.
During the whole day's meeting, regulators reiterated their confidence in helping the country deliver the growth target. But their job remains tough, as finance industry faces irregularity from time to time, and when panic appears, it will take both speedy and accurate measures to appease the sentiment. Ming Tian, CCTV, Beijing.